What's up guys, Raymond here with another video, and in this video I'm going to be analyzing some more financial terms from the CeMAP course, which is the Certificate in Mortgage Advice and Practice, which I'm currently studying. So in this video we're going to be, as you can see, looking at the term Bank of England. So the Bank of England, what is the Bank of England? Of course it's a bank. It's the United Kingdom's central bank, and it is wholly owned by the UK government. So what are their functions? So let's just quickly check. I know they uh, manage monetary policy for the United Kingdom, and well, of course, I said it's a central bank. It's not a commercial bank, so it's not a traditional retail bank. It doesn't operate in the same way, but it has some similar functions. They provide the banking services for the United Kingdom and other central banks and some financial sector firms. So let's just quickly check on the page to see if we can find any more information about what the Bank of England does and um, what its services are. So let's quickly accept the cookies. So who are the original owners of the Bank of England? Let's start with the beginning. The governor, and company of the Bank of England, or as most people know it, the Bank of England, was established by royal charter in 1694 to raise money to fund a war with France. Over 1,200 people purchased shares known at the time as bank stock, totaling £1.2 million, which was the value of the government loan. The first shareholders came from a variety of backgrounds, trades, and professions, including carpenters and grocers, merchants, doctors, knights, and royalty. Mike Anton, our archive manager, shows the first bank stock ledger from 1694, and so the Bank of England is a very old institution. It's well, incredibly old, and it was owned almost like a public stock as a public stock. Uh, it went through the same process, initial public offering, but it didn't start off with a it didn't go through it. For example, initial public offering, usually the company is very small, and then when they feel that, when the shareholders or the people running the company feel they have enough confidence that the company will be able to expand and be able to raise enough capital if they went public, then they go forward with the process. But the Bank of England, in its inception, wasn't necessarily a company that was established and then went on to raise money. I think the company was established as a public company that initially tried to raise money at its inception, and it done pretty well. It raised £1.2 million in 1694, which at the time was a lot of money. Around this, if you bring that £1.2 million to today's pounds, that will be a lot of money. I'm guessing in the billions. So the opening entry of £10,000 held by King William and Queen Mary would be equivalent to approximately £1.25 million today. So if you, that's about do the math. That is about 100 fold. So if you do the math, that is 100 million. So 102 million. So 120 million. That would be. So that's quite a lot of money. So when was the Bank of England nationalized? Although we are still privately owned, from the mid 19th century onwards, we started to behave less like other private banks and more like the central bank, like a central bank. For example, we had control of issuing banknotes, which is, of course, everybody knows is a monopoly that the Bank of England have. England and Wales, and taking responsibility for protecting the financial system. So they have a large role, probably the largest financial role in the United Kingdom with regard to finance. We are nationalized by the government. Sorry, we were nationalized by the government in 1946 due to our importance to the economy. Other central banks across Europe passed from private to public ownership around this time too. At the time of nationalization, we had £14.6 million of capital. So that was in 1946, held by 17,000 shareholders. Most shareholders held relatively small amounts of bank stock. Of the 17,000, two-thirds had less than £1,000. They were all compensated by the government, receiving Treasury 3% stock in exchange for their bank stock. The amount based on the number of shares they had owned by the bank, at the time of nationalization. So probably in the next video we'll be talking about nationalization and what nationalization is, as it'll follow the same procedure that I follow in these videos when defining terms. and I'll give you guys a brief, as much of an in-depth overview of what nationalization is, as I've been defining these terms in these videos as I can. And I hope you guys have enjoyed this one. I'll see you next one.